Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings and welcome to Macro to Micro Power Hour via options. We are totally focused on options this power hour. And I'm Samantha LaDuc, founder of LaDucTrading.com, joined by our derivatives expert, Hans Albrecht. He is our options mentor in our Slack workspace channel for members, posting trades and helping support their trading and investment goals using options either for alpha or as hedge or as overlay strategy on top of portfolios. And we talk all things options in this hour. So feel free towards a halfway point to hit us up in Zoom Q&A with any questions you might ask, because this is kind of an Ask Us Anything. And we want to kind of frame it both from the macro right down to the micro. I'm most focused, obviously, on running a live trading room. So I'm chase, swing, trend time frame across all assets, and those that can be utilized with options. That's absolutely my preference. And so we talk a little bit about the market and big macro event news today, of course. And then we'll just kind of go into your questions, and then we'll also have this live streamed for those who might be on our YouTube channel that get notifications. We decided, in addition to this Zoom webinar, which we hold every Wednesday, same time after the close, 4 o'clock, so you can use that recurring access link, and you'll be sent a video and you'll have the access for every 4 o'clock Wednesday. This has been intense, and we have a decision. We do not have a contested anything. We have Harris making a call to Donald Trump to concede the election. And it was very, very much, I would call it a landslide, in that not just the popular vote and the electoral vote, but all the demographic categories moved to the red side. I mean, every single one. So of those who actually did vote. So it's clearly not contested, but Trump still does have 20 days out some sentencing, which may very likely go away for president-elect. But your VIX crush call, which really we just talked about yesterday in our Chase Live huddle with clients live for an hour and a half. I said, can it go to 200-day? And if so, when? It hit there this morning. So we had the big VIX crush that you were counting on. And then, of course, the melt up has, I believe, in large part triggered because the dollar just went absolute hot fire flames relative to other currencies. And that is something we're going to talk about more on the macro trigger for some of this stock advance. So tell us what you want to cover in this power hour. What's the agenda?
Yeah, so it was a bit of a perfect storm, wasn't it, for stocks these days? I mean, we've been sort of a little bit nervous. We've been talking about how everyone and his or her brother has been talking about this melt up. So it almost got to the point where you were wondering, can this really happen when everyone's feeling like one particular outcome is the most likely thing? But if you look at some of the charts that I'm going to show, you can really see that a lot of managers are underinvested, and people have been generally kind of cautious. It's not that unusual. We've seen that the last few years, where everybody goes into the next calendar year a little bit sort of nervous with lower expectations, and then analysts sort of spend the whole year kind of adjusting to the new reality of, guess what? The economy once again did not compress. And so I think that's kind of the big story. Of course, the election is a big story. Behind that is this sort of idea that the economy is still chugging along, and for whatever reason, rate hikes didn't really transmit very well into slowing things down. And so that's the reality of things. And we've seen this MOVE index remain very high. And in fact, today, if you look at it today, I'm going to just pop over, if you don't mind, into my situation here. And you can kind of see that we've had this pretty amazing drop in the VIX today. Now, you and I were talking about how we probably needed to see a little bit of resolution from the FOMC in terms of that event, whether it was good, bad, indifferent. Sometimes just getting by past an event is enough to bring down those fear levels, because markets just need to know. Sometimes they need to know whatever the outcome is, just tell me, is what markets sort of say. And so we've had that happen on the equity side of things, but amazingly, we haven't really had a massive pullback in the MOVE index. There's just a little bit more to go. And I think that's, of course, because we do have this big event tomorrow. So while it's party time in equity markets today, for the most part, not as much in technology, but in a few names, Amazon, surprisingly, because it's Bezos, but like we talked about yesterday, that's the results were so good, and then the whole Bitcoin complex went bananas. And but we still kind of have a little bit of a hurdle to get past. I didn't think we would get down here in the VIX, but I set up for a volatility crush over the next few days. So it didn't really matter whether it came today or tomorrow or the next day. The idea is that typically you get kind of a 10-day drop. After an election, you tend to get markets on average rally a little bit, a few percent. You get volatility markets compressing over the next 10 days. It doesn't happen immediately because that's not how volatility typically works. You sort of get this echo and it takes time for people to accept that, okay, things are okay. And because of what's happened since August, which is those very stressful events that we had, and so we had this a little bit of a volatility echo where people are a little bit nervous about things, and we've seen that play out over the last month where equities haven't really been doing anything. So you kind of look at what equities have done, and it's a whole bunch of bupkis, right? We've got triple the VIX. Versus the underlying movement in the market. And so that's very, very high. So we haven't seen a market this quiet relative to a high level of VIX and the MOVE index and the various other asset classes that have drawn in some of this high level of nervousness. We haven't seen something like that in a number of years. But it happened. And for good or bad reason, right or wrong, here we are. We've gotten past one big thing. And so the reality is that the market, we can kind of see, we look at our little gamma levels here, which we sometimes like to touch upon on the show, is there really isn't a whole lot of gamma. So what that means is there aren't a lot of positions that dealers have to sort of hedge at the moment. And past this week, it gets very, very thin. Now that can change as well, because I think what you're going to see happen is you're going to see a lot of call sellers come in. So I used to run a lot of cover call funds and option overlay funds. And that's what we do, right? The next expiry comes along and you start hammering away at those upside calls. And that stuffs the dealers with all this option volatility. And all that means is that sometimes can temper some of the upside. So there's that idea that we probably run into a little bit of upper resistance, and then, as you mentioned, last few days, we are going to have to face the reality of yet another big event, which is NVIDIA coming up in a few days. Do you think that's going to be pretty big? I kind of feel like it's
November 20th, and it's, of course, very big, especially since I have higher price targets in SMH. So even if we run up into NVIDIA earnings on November 20th, I'm still bullish semis. So even if this outsized rally reaction on the Trump win, which is very much pricing in more tax cuts and removal of regulation, it's not really, I would say, tariffs and higher deficits and inflation be damned. They're very much focused on lower tax rates and fewer regulations. But for the most part, even if we have some chop and digestion, we are likely to start still moving higher in semis. So I'm still bullish for sure into NVIDIA. And if we haven't hit those price targets, I'll be bullish through NVIDIA earnings on 11/20. So yeah, we still have the jobless claims tomorrow morning. We have productivity tomorrow morning. By the way, that's very important. Folks forget that productivity, inflation, and wage growth are really the three legs of a table for bonds, and they matter. So since everyone's focused right now on bonds, and myself included, at some point bond bulls need to get defended here. Those are two prints coming out tomorrow that will be very helpful. And then, of course, FOMC decision, 25 basis point cut, I still expect, even though we're, screaming through all-time highs in indices. And I still think that they could intonate some movement around their balance sheet. We've got end of year debt ceiling coming up and QT ending potentially sooner rather than later. There's no political need for them right now, right? But Yellen won't be around, basically. She's already agreed. She's leaving with Biden in January. So it's just Powell. So for right now, I'm still bullish into end of year, but it's not clear sailing. We still have some issues to deal with around Fed liquidity, and that to tighten or not to tighten, and then of course debt ceiling as we run the clock down. So yeah, Nvidia earnings is front and center, the most important.
And this is it, right? So we've got that 10-year kind of staying a bit firm, maybe a little bit surprising that stocks are sort of shrugging that off for the moment. I'm not sure how long they can do that. I'd prefer to see that 10-year kind of in the low fours, just to have my porridge nice and warm, right? We don't want extremes anywhere, and that's some cause for concern if we're going to start heading towards 5%. That should make a difference over time. So, this was one of the primary concerns with Trump, is that generally it was considered very bullish if he was going to win. But we're going to be adding some debt to the balance
I
sheet.
actually have a non-consensus view on this. I'm actually on the opposite side to Darius, whatever, of 42 macro, of that chart that you're showing, and consensus that Trump will spend like a drunken sailor, like he did, like Biden did, like Harris was absolutely expected to. I actually think that the team that he has assembled around him, which spans libertarians, Ron Paul, to Democrat turned independent RFK Jr., to Tulsi Gabbard, to Vivek, to Elon Musk, organizational efficiency king, to the point is, we've got Democrats, Republicans, independents, and libertarians that right now are surrounding Trump, that are saying, we know what's causing inflation. It's printing. So let's knock that off. So I actually disagree with consensus. You know me, I'm not afraid to do that if I have a really good thesis. And my thesis is no, they're actually going to try and do some fiscal restructuring. So I know that this can be debated, and this is not the purpose of our particular talk. We're focused on options, but you brought that up. So
that's a great point. And you know what? That in itself is bullish, right? If things don't get out of control on the fiscal.
It is actually short-term bearish, but it is long-term bullish. And that's something else I wrote about for clients, which is, this is pain that we need to experience, or it'll just make the trouble bigger and bigger and bigger. So I really think that this is actually, and this is for next year, because remember, no policies are going to get passed until Trump's actually in power. A market can price it in all at once, but for the most part, we really are our seasonality and Santa and all of that into year end. And then next year, when policies come in and get passed, then we're going to have to price that in. So I do think there's going to be kind of broadening out from the underbelly, but I think we're going to have some still rotation lower in semis next year. Tech will get hit. Long story short, I think this is bullish, but it is still going to be an operation. So we still have to go under the knife. I think our survival rate is still very high, but it is still serious surgery. And the current administration and Fed Treasury constant policy interventions have delayed this surgery further and further and further out, which has only made the cancer grow. So at some point, I think that this is just needing to be, dealt with. And I'm hopeful that Trump doesn't exit stage left all of these advisors that absolutely helped get him elected, and heed that advice, collective advice, and get the job done of fiscal restructuring. So I'm against that chart that Trump is going to blow it out of the water.
You're right. Hopefully it doesn't go rogue, which we know Trump is prone to do. But you're right. In the meantime, it's about flows, it's about seasonal, it's about everybody staring at that December 31st date and going, boy, have I performed? Have I underperformed? Well, here you go. We got a lot of underinvested managers. You've got seasonal effects here. You've got a corporate buyback window, which of course is associated with very, very big buybacks. Actually, in infotech, primarily. In others, we've seen financials do fantastic today. Healthcare, a little bit meh, but buybacks are very, very important to the equation. So we do have this kind of sort of positive backdrop from the standpoint of, okay, there's going to be a little bit of catch up to play. And so off we go. And so we've been talking about this upside skew being relatively inexpensive, right? Everyone's looking to the left tail and forgetting about the right tail. So we've been putting on our NVIDIA trade is doing very, very well. Some of those big SPY trades we saw about 3 weeks ago, boy, they're going to start printing, aren't they? I mean, those SPY trades that people picked up on very cheap upside call skew are going to be looking fantastic.
So let's just talk a little bit about some of those. Like, I want to pull some of those out. So, for example, when we did our Slack member huddle yesterday, and Archna and Nelson in particular were looking at all that geo flow. That was something that was recommended back at $10 just because it was a trend reversal, right? But the point is, this thing went up 26% today on a Trump win. Sadly, it's profiting from prison. But the point is, that was a very big outsized move, and they have been tracking that type of flow in options. You and I have been looking at, okay.
Samantha, are you showing a chart?
No, I'm just talking about it.
Sorry.
But I could. Yep. And then you were also talking about the NVIDIA advance, for example, and Tesla, as that was my Tesla Trump trade, right? So just Tesla is, I should say, Musk is absolutely dependent on government as it relates to SpaceX and subsidies for Tesla, et cetera. So if Trump was to win, and that's why he hitched his horse, really early on to that cart. But the point is, that was clearly hot fire flames in Tesla today. Geo was another one that was a Trump trade. But NVIDIA is one that we've been talking about here for many, many, many weeks. And that was set up a month and a half ago. So no, a month ago. That was a financed call spread where I had a price target of 48,150 this year. So that December financed call spread, and oh my goodness, I'm impressed. Of course, it would have gotten there regardless. Today is not the reason it got there. It actually, tech, if you look at it, Google and Microsoft, and then Amazon ran 5% after it got above 200, the Bezos call wall. But tech didn't really have the big move, right? Small caps, Russell moved 5%, or doubled the performance in NASDAQ, right, today. So it was really about the economy kind of broadening. And anyway, long story short, that NVIDIA finance call spread is still in play for December, selling the 115 puts, buying the 135 by 148 call spread for scratch. It's now, up 6,000%, right? I mean, you did that with coin. It went from 125 to, I think, 20. So we love these structures, but we have time. We weren't banking on Trump winning today. It had nothing to do with that. It's just a really good, solid play into end of year. And today it just got it there a little quicker.
Well, that's it, right? And sometimes you get an accelerant like today, and you may not have banked on that happening, but you're in the right place at the right time. When you give yourself enough time in these structures, my coin structure was a June of next year.
I know, brilliant.
It worked out nicely, and it almost worked out, surprisingly nicely. So we had this trade. I kind of picked it up as it started to break through this trend line here, picked it up, and then sold, around 182, 183 that morning. It dipped. I remember it dipped under 180 after a big pop up. And then that line held. And that's when things started to look a little more interesting again for the whole Bitcoin complex, and sold some at 205, 215. This is the structure I'm saying. So, turned $1 into $8, and then I sold another tranche at maybe 13 or 14. Then it pulled back. I had 1/3 left, so I held on because I told you, look, I'm holding on to this baby. I think it's going to 250. It pulled all the way back on earnings to 181, and I saw it get very close to this trend line. I said, you know what, that third that I sold, I'm going to buy that back. And sure enough, it bounced, and who could have known, but everything just turned out beautiful for the whole coin complex. We see Bitcoin making all-time highs today, and we'll see if that lasts. But coin made MSTR look docile today. I mean, it was up $60 at one point, I think. And so
I think there's a reason, though. So MSTR, we talked about this again, like a good month ago, right? September 18th, 20th timeframe. The MSTR leads the Bitcoin advance. Bitcoin took off, broke that key wedge that we've shown here as well. Everybody sees it now. And it came back in and looked like it was going to retest 64,000 before the Trump, trade of Bitcoin regulation removed, and he's very much a pumper of Bitcoin and crypto and such. So The reason I think that coin did its outsized move today is because it is very heavily shorted, and it is actually a fabulous fundamental short. So as we talk about Bitcoin as a liquidity proxy, as a speculative, asset that we love to trade, don't necessarily believe in, as we look at, Bitcoin breaking out of that beautiful wedge that we've shown here week after week and everybody else sees, the point is there are several proxies, some that we like. MSTR leads, Mara lags. Mara is the Bitcoin miner that has the most Bitcoin, and it's the most efficient, let's call it, of the miners. Coin, based on transactions, but also not well run, even though he's got a celebrity CEO status, that's actually a really good short fundamentally. So I think one of the reasons that Coin did this outsized rally today over MSTR or Mara or even Bitcoin itself was because shorts had to cover in a hurry.
Caught some people off guard, didn't it? Yeah, they weren't ready for this. And that's kind of interesting. Now, it's funny that you say that, Samantha, because I was looking at the skew yesterday here. So, folks out there watching, you always take a look at the skew numbers. You can get some of this data out there for free. And so you've got very flat. This red line is yesterday. So, of course, the volatility was higher. It's lower today where the green line is. But it was very flat. And so interesting what you're saying, because this was not expected. Amazingly, what you typically get with coin and many things like coin, like gold and some of these sort of fear assets, is you get this is your average for the year. So you get, and that's not even super inverted or anything or steep. It's relatively okay for coin. But yesterday you had absolutely very little expectation. This really caught people off guard, I think. Today you saw it steepen a little bit, which is unusual. On a massive move, sometimes you'll actually see that flatten a little bit because people are selling out what they bought, right? So if they owned a whole bunch of calls and this was already steep, the thing rallies and then they start selling out their exposure, so that can kind of pressure that upside. But we actually saw it steepen a little bit. So I'd like it for a sign that this thing could keep going. I'd like to see this steepen a little bit more. Now, I wouldn't be surprised, as I'm sure you wouldn't be surprised, if we kind of pause here. So I sold some right almost near the close here. I've kept a third. So I sold my first third that I bought at 181 at 226 or 27 this morning, which was a wonderful, lucky pass at it. Then I said, I'm going to hold on to 2/3. And it was the right thing to do. So I sold the second third around 254. So I got 31.35 for this one. I paid $1.50, sold it for 31.35. Now I've got another third. And I put out today in the community, I said, you know what, I'm feeling like a pig here. I feel like pigs get slaughtered, but I'm going to hold on to this third. I don't know if Bitcoin goes to 80 grand, 90 grand and beyond. You know what these things are going to do. They're going to go parabolic. They're going to go GME on us. I mean, the whole market's GME today practically, but these things are going to go bananas. And I just want a little bit of exposure. I may revisit that tomorrow. I may say, you know what, I'm going to take this off because right now the call spread that I have is we're about halfway between. I've got the 200, 310. That's getting a little bit high in delta. So what I could do two things. When you're long a call spread, you can roll the entire structure up. So I could roll this up to a 250, 350, or even something a little more out of the money. What I could do is keep the same upper side of the structure, which is a short 310 call, and I could move the 200 call, which is now very deep in the money. I could move that up to maybe 240 or something like that. So what you're doing is, as you adjust that lower call strike that you're long, you're in effect monetizing some of the gain because you're selling out of a deeper in the money call to buy an at the money or less in the money call. So you're able to monetize some of that structure so that if things turn around and go the other way, at least you put a little bit of coin in your jeans. So we'll see what happens with that last third tomorrow. After that move, would I be surprised if it pulled back? I'm going to try not to feel too bad about it because I've been playing it like a Stradivarius. So I'm going to just I'm going to go with my gut at this point because my gut is working. And sometimes it doesn't work on plays. So I'm going to go with my gut. I'm going to see what happens here, watch the whole thing. What levels do you, for a true breakout, not certainty, but for you to feel really good about a breakout, Samantha, where do you want to see Bitcoin where you go, whoa, this is get out of the way here?
So I already did that back on October 17th, anyway, for clients, right? Because we kept covering Bitcoin. It's looking for a breakout. It's looking for a breakout. I'm still bullish Nvidia and, Bitcoin and the Tesla and the rest. But in particular, we had talked about MSTR, your play that led before Bitcoin took off. And then you said, we're talking about coin and Mara. Coin today was up 30%. Mara was only up 19%. Mara is next. So remember, I still believe Mara is next, being that it has 30% short interest, being that Bitcoin is getting now very, very bid because of Trump. Now, I am not a Bitcoin expert. I can look at it technically and go, if then, right? So if it gets and stays above a certain level, which is 64,000, it's already retest that, it can double. So this is how I look at these wedge breakouts, not because I'm a Bitcoin fanatic or cult member or fan club, nothing, zero. I'm not. But I can say if 64, it can double. I also have, a colleague who is very much into this on-chain analysis for Bitcoin and has his own secret sauce formula for timing Bitcoin, both long and short. So he is also agnostic, and his back-tested results are phenomenal. So he was highly recommending it at 60, saying he also could see it double. And that's actually what I went and, wait a minute, explain this to me, because I can see it technically. You have other reasons. So my point is, of course, it can get parabolic. And Mara would be in the running. We've already seen MSTR. We've already seen coin, and then of course Mara. But it doesn't mean it's in a straight line. So it can also just digest here, especially since we do have FOMC, CPI. Maybe there's some other tricks left that haven't been played out on the macro scene over the next few weeks that could kind of distract. But I don't think the liquidity right now that we have in the market is totally funneled into Bitcoin. It's definitely broadened out into the market. So there are times where we get it's a currency as far as I'm concerned. There are times where the dollar and Bitcoin kind of have this correlation. Other times it's with yields. Right now, dollar and yields are moving sharply higher. And then I warned last Tuesday, especially for clients that were long gold and silver. I was exceedingly worried about this, not a little bit, but like on a rant about this. Yeah. So, and that's exactly what happened. Silver has come down 10% since my rant last Tuesday, the 29th. And so now
I should have listened to you, Samantha, because I sold the 30 puts in December on SLV. So I'm going to be a proud owner of a little bit of SLV down in the low 28s.
Come back.
My idea was your nice, beautiful, I noticed on one of your charts, there was a beautiful weekly and monthly breakout. And I thought, okay, if we could just hold, this is kind of that backdoor way of playing a little bit of the power up theme, a little bit of the AI theme, isn't it?
Silver, no. This is pure macro for me. It really is. Yep, silver and gold are very much macro for me. And this is also part and parcel of, if we have continued fiscal deficits running out of control, then we have much, much more demand and need for gold and silver. But as Trump comes in, and I do believe there's going to be some restructuring, that's one thing. Second is that strong dollar and yield correlation with gold and silver. It has diverged, and I noticed that it was going to come back in, not just mean reversion, but there were macro kind of reasons. Real gold relative to real yields relative to gold was extremely divergent. So there were like 5 reasons I came in and said, okay, technically it's time for a pullback. We're definitely going to have an issue if Trump is elected with a rising dollar and the peace trade. This is another reason, right? The peace trade is
yes.
But disarming, hopefully, this conflict, Ukraine, Russia, in Middle East. In fact, Hamas led whatever said on the victory of Trump that they have initiated a ceasefire. The point is the geopolitical risk comes out of gold a little bit. There's nothing wrong with this as a trend trade, but everything I had from intermarket to political to macro to technical, it just screamed pullback. So I think 27 for SLV is a much, much better place to buy again. Long story short.
Okay, that's good to know. That might be a nice place to load up again. Yeah, here's your palladium. I mean, what a breakout, blow off top, and then drop the PAL about 20 bucks. So that was a pretty extreme. I actually sold my gold. Having said that, I sold some. I'm going to own silver here soon, but I did sell my gold a few days ago because of just going into this big event. And I thought, it's we're going to get that vol crush. Well, let's talk about that in a moment. But I moved my gold money into one of the names that I mentioned yesterday, which is, I didn't go full one-time short volatility. I went with the half. So there are a couple products here that I recommended. I gave people about 5 different ways to play this vol crush. So there was something for everybody, from the grandparents all the way down to your kids. There was a way to play the vol crush. So here I rolled out of gold a few days ago. Really a great trade. Not that I knew it was going to happen, but I just thought it's about time we start bringing vol in a little bit here past these events. And that's been a really great trade. I think I swapped it out at 46, got into SVXY, which is short, half short volatility. So basically it's an index that tracks the front 2 futures. There's a roll mechanism on the front 2 futures. It's always looking for sort of a 30-day rolling measure of those front futures. And that's how, because you can't really trade the VIX, right? People ask, well, how do I trade the VIX? Well, you can't. All the products, really most of them, are trading the VIX futures. And so I said, well, look, you can get into SVXY, you can get into SVIX. So if we look at SVIX, had a 5% move today. And I find that kind of interesting because once these products get going, that's what you got to realize. We can get through FOMC, and there isn't anything that sort of throws a giant wrench into the mechanism here. This is the kind of play that can kind of drip to the upside, which is going to be its inverse, what is really happening, which is a drip down in the VIX and the VIX futures. And so what I want to show people is a couple of these trades that we talked about. I think we might have covered a little bit last week in the show, but definitely in the LaDuc members room, we talked about a couple of these trades, which worked out nicely to varying degrees. So let's look at these a little bit. Well, our VIX downside fly. So I had a VIX downside fly that I put on at about 56 cents. It was the 19, 16, 13 that I was recommending to folks. We might have talked about that last week. And so I put that on for 56. Now I lagged a little bit. I think it was about 65 on the board. Now I bought the 19 puts and then eventually sold 2 of the 16 puts, and then bought some of those lower 13s just for that little margin help there. I don't think the VIX can get down to 13, but that's a little margin help. And so I think it got marked to around $1.50 at the end of the day. And I had a couple members ask me, should I take this off? And I said, well, for me, it's not a difficult choice, because the way that this typically plays out is volatility. There might be a little bit of a hiccup here and there, right? And FOMC is certainly a reason for the VIX to kind of pause, which it did today. I'm surprised it didn't get a little bit closer to 17. It got up there, maybe 16 and a half, 1660. But
no, that's the 200-day. That's exactly where it needs to go and where it needs to stop. So, or I should say base. So that 200-day is a magnet, and it went right there. I'm talking about VIX itself, not S.
Right.
Yeah.
The VIX here, right here. And so we've broken this nice trend line, these levels here. Now we can chart VIX like we can chart anything, like we can chart sentiment and things like that. But what typically is what I feel, I said, look, you can take off a little bit, but my feeling is that we're at the beginning of a drip. I need to see the move down. Like you, I want to see some of these other volatility measures kind of relax a little bit. Today was one giant step. VIX got a little bit lower than I thought it would get to. I thought we'd maybe get down to around 17, 18 maybe, because of that FOMC. I was sort of thinking like you that this is a big deal too. President is, well, we're going to get one to the other, but clearly we weren't looking for such domination from Trump, which is really what got into things, right? If it was a little bit more measured, maybe we wouldn't have gotten as much of a reaction. So I think at this point we could sort of drip down towards 15, and eventually we're going to start to maybe worry a little bit about NVIDIA. So that'll be kind of our last sort of hurdle in this whole kind of volatility mess that we've really been in since August 5th. This is sort of the denouement of this giant mess that started back then. So I said, look, I would wait a little bit because I think you're going to experience a little bit more of a volatility crush. And for me, I've got so many other longs working. Like I don't mind; it's fine. I'm waiting a little bit on this. We had a couple of other trades that looked good. One was a VXX 4846 put structure, so a downside put spread. That went from, what did that go to? I think it was trading at about $1.10, and it went to maybe $1.60 by the end of the day. That wasn't bad. The one that did sort of the most mediocre was buying the December 15 put, because, and as I said, you're going to get a volatility contraction on the volatility. So not only is the direction going to be down in VIX, which helps you, but you're going to get volatility compress. And so I said, well, you could maybe sell an upside call spread to help to pay for that. But it wasn't my favorite thing to do because I wanted a little bit more gamma. I wanted a little bit more reactivity. So I was favoring the butterfly. I was favoring the VXX put spread, because VXX again is that product that plays that front to futures, and right now you're getting a compression here as the whole curve normalizes. So what's really happened is you've gotten the curve that was in, and you've been talking about this too, Samantha, which is this curve in backwardation that has really normalized now.
Let me show that chart because this is such a whopper. All right, so this is the 3-month and spot ratio that I have on all the time, and I show it for clients in the morning, the live trading room, because when it is below this one mark, it just basically, it's kind of triggered backwardation, and that's volatility producing. When it's shooting higher, obviously it's not. It's back in contango, and it's definitely doing its thing here of supporting lower VIX and higher SPY. So this is definitely why I have this overlaid. This is a ginormous gap up, I might add. But yeah, this is very much still in play. So this is what I've been looking for, right? This melt up trigger where it goes together, it really has worked. But I don't want to leave your option play, but I still have to say in large part, a lot of this was this excitement in the dollar. This is only a 2-hour chart, but this is the dollar index to kind of show you we shot higher relative to a lot of other currencies, yen, euro, and the like, where this was a directive saying, hey, Trump's going to be really friendly. Regulations are going down, taxes are going down. That's going to pull money from abroad here into the States. It definitely outperformed and is also part and parcel why I was so nervous about this gold rollover when I warned right here on the 29th. So gold, silver, precious metals in general. And the heat map this morning was kind of ironic. The very first thing I showed, it didn't show this right now with some green coming in on the screen, but everything was red except for these 5 and the dollar. Everything else was red. So it definitely hit commodities hard. Yields spiked higher and they went above my line in the sand. So this is really not safe to buy bonds yet until we can get to the 10-year back down. And you can see even SPY performed technically. Look at this double bottom, right? It could have gone either way. It absolutely could have gone either way, but that is a very large move for SPY and the Qs on the kind of knee-jerk reaction and short covering reaction on that VIX dump. And now we're waiting to see what's next. And
yeah. And look, the whole vol crush thing, I mean, it was kind of like, pick your poison. It was right across the board, right? Because we have a bond iron condor on, which is doing fine. Definitely not as well as some of the VIX plays. I was looking at a DJT iron condor yesterday, which a friend had an idea about, and And that looked great. I mean, at one point today was unchanged. The stock was unchanged. So that would have been just a home run. So there were just so many different ways to play this vol crush because the vol had sort of seeped into everything. Now, if we start to get into sort of a VIX 13, 14, that's a different environment, right? We're going to have to adjust as option traders to the new environment. That's going to require different kinds of structures, right? You don't have to do as many butterflies. You don't have to do the same kinds of things. So here's the vol curve. This was yesterday, so this is not a happy picture, and this is a much happier picture. Now we could see this dotted green line is the VIX. We could see that drop down into the low 15s. The VIX futures may not drop as much. Those front futures may drop just a little bit more. So that's what I'm looking for, just a little bit more of a drop in the node. And then I'm going to likely take off my structure because I don't want the VIX to get too low. But we'll see how that plays out over the next few days. So these were some of those VIX trades that we've been talking about. This was in my slide from yesterday, volatility crush on the horizon. You get 10 days of VIX crush, not just one. You get 10 days because this is a process of adjusting to a new environment. I call it the drip, drip, drip. And then some people I know just bought the 19 puts. Those were a double today, doubled your money, which is great. Now that's not something you put 50 grand into, right? These are all appropriate in their individual sizes. And another trade I suggested was just an SVIX November 26 call. And those were 90 cents. Those are $1.90 now, I think, at the end of the day. So there were just so many ways this VXX spread was 55 cents. $1.25 today. So there were so many ways to double your money and triple your money over the last little while. Of course, we needed the crush to happen, and you needed to make a call on that. But it just
we need 3 crushes though, not just one. And we talked about this yesterday, right? My contention anyway was that we didn't just need equity volatility to get crushed. And exactly my question yesterday is how soon can you see the VIX going to the 200-day, which is around that 16 plus, exactly what we hit this morning.
Yeah.
Second is the move volatility, so treasury volatility. I should say the move index, which is treasury volatility, also needs to come back in. It did, by the way, even though we spiked higher into 4.47 from my 4.37. So that was a big move. And yet the move index fell. And last but not least is oil volatility. Oil volatility has stayed bid with VIX and with move. That is very telling that we still have geopolitical risk premium in that sector, right?
Yeah.
And not related to oil and gas plays popping up today. That popped up today because removal of regulations is bullish for the oil and gas sector, which, as Bob, our oil trader, also in our Slack member workspace said, it removes some of the extinction element that had been put on the necks of oil and gas executives over the past 4 years under a Biden administration. So they popped up like daisies, right? Even energy moved higher. But oil volatility, OVX, is very much focused on crude. And crude can come back in some more, especially as there is announced, de-escalation or ceasefire or potential armistice, that type of thing coming in. So we do need oil coming back, volatility of oil, treasuries, and equities to have a sustainable rally. That was basically my contention yesterday, and we've obviously started that process. A little bit aggressively, but we've started that process.
Yeah, we should work with the LaDuc members on a little bit of an oil structure. I'd like to take a look at that maybe tomorrow because I think that's interesting. I took mine off today just because the vol was high, as you said, OVX, and I owned some 92s and I covered some upper calls. And I just didn't like them. They were at 70 cents. That would have been a good thing to hold on to today. I would have made a little bit on them. But I just had too much on. So sometimes you got to just kind of trim the herd a little bit when you've got too many positions. So
we'll talk about that. We'll talk about that. And specifically, I have 2 names I'm very interested in the oil patch that started today. But I also want to answer a question by Jess, who's been very patient. She put this in at the top of the hour, asking about in regards to short-term thoughts on Chinese stocks. And I'd like to weigh in on that if I could, because obviously with the Trump win that he threatened 60% tariffs on China goods coming into the US. It's a big hit, especially medicines and things that we really need. and then a general 10 to 20% tariff on everything else. The incentive is to have US companies manufacture here, but it will take some time, obviously, to tool up. This deglobalization train does not stop on a dime. But the point is, China then said last week, as the chances were clearly increasing for a Trump win, and now Main Street's really starting to price it in, and folks are getting pretty excited about it, but they don't know yet because they're being told still it's too tight to call, etc. Anyway, and there was a lot of threat that it might not be called. So we get to the point where China came out and said, we will announce stimulus on Friday, the 8th, which is 2 days from now, if Trump wins. And the reason why is because they're trying to offset some of the effects that tariffs obviously would have on their exports. Now, I have not seen any price action change in the Babas and the Baidus since they've already hit the wall several weeks ago that I warned about, and have come back down to the mean, which is basically, where they're basing and trying to figure out, is this stimulus really going to be sizable enough to get the Chinese ADRs bid? And I think it's going to have a hard, it's going to be a while. Once Trump maybe gets in power and negotiates, right? Because this is his thing. He's going to threaten 60 and then do 30 or something like that. I think we'll have a better feel, but in the new year. I don't think they're going to pop up like daisies and get above that huge, what I call the China wall on a monthly. I've shown that chart before, and I could probably do it again. I think we have to wait until we can get some real sustainable cooperation between the two countries and policies figured out, negotiated, and then we'll have lots of time. Like, for example, remember in 2018, he basically levied steel tariffs, and it really hurt, actually, demand, period. But even US steel fell strongly from the top. So there are lots of debate about the value of tariffs, and good, bad, and trade wars can be won and all that nonsense. I don't want to get into that. I just want to say, as it relates to the Chinese ADRs, they're not quite ready. They are definitely overvalued. Jeffrey is a big Baba bull, for example, because it's over.
Mhm.
It's overdone to the downside. The Michael, the big short guy, Burry, he is like 22% weighted in Baba. I mean, there are some really large concentration risks out there in some of these plays. And Jeffrey actually has a few very successful China plays that he plays, stock and options. But big picture, I'm talking about as a sector rotation. It needs macro. It needs fiscal stimulus. Everything that they did was very much geared towards supporting consumer confidence, which is hard because China was in additional year-long lockdown. They're not too happy still with the government. It's also around capital, in their capital markets, their stock markets, trying to get folks back into it. Not to mention the property mortgage rates getting cut, and then a lot of local facilities and repo. My God, they're taking up a page from the playbook by the US and doing repo facilities. So there was a lot of localized incentives and stimulus, but the stuff that was not announced was straight out fiscal spending of size. And until they do, I don't think the China stocks are going to get over the wall.
Yeah, I know that's been a little bit of a disappointment because they had that nice run. People are looking for kind of a bounce here, and it's not happening. I know we don't have much time left, so I wanted to just talk. So we had this Meta. I had a really terrific trade. We talked about it last week. Sold it out at 597. This sort of upside finance structure again, which I've been loving lately. I like it. I like those structures in a high volatility environment because everything gets very expensive. So if you can finance your expensive directional play, you're going to be in good shape. You're not going to have that sense of urgency to take the first little bit of money that you make on it. So I'm a big fan of these kinds of plays. Now, if we get into a VIX 12, 13 environment again, now we can do things and stick our necks out a little bit. When the option pricing is low, we can do some different things. But we had a big pullback here after earnings, and it got down to 565. And this is a name that I really love. And I feel like this 540 to 550 level is very strong. So what I did was I sold the at the money puts in December, and I got a really high volatility because we've had this sort of event coming up. Even though earnings had passed, we still kind of hung in there a little bit. And I felt like I got $25 for them. Now today, social media was not was not popular today. So those stocks kind of spun their wheels or didn't do very well. With the stock unchanged, but the puts that I sold at $25 are already down to 20. So that's a really great example of volatility crush. And you have to be aware of levels of volatility, which I help members with all the time, trying to give them an idea. Because if you bought puts or calls on Meta at a high level of vol, you're going to get hurt very quickly, and the stock didn't even have to move, and these puts are down $5. So that was one interesting play. And then beyond that, I like to finish with some boring stuff. I bought Reddit. It ran up 5%. I showed you that chart the other day. You're like, Hans, it's a bit extended. It certainly is. I find it interesting, right? I just find it's got some potential. So I sold some decent 125s against it. It stalled out a little bit today. Now I do have some covered calls that were threatened. IWM, boy, I got that one wrong. I mean, it's a good trade. I made money. I like it when I'm wrong and I still make some money, but I gave away some upside because I thought, boy, if we get interest, if we're in a higher for longer environment, which again today is confirmed, how do all these companies do well in floating rate, but they love the regulatory part of the conversation, right? So.
But remember, Trump is going to try and get interest rates down, and they won't do well in a high interest rate regime, which is why we talked about that Goldilocks, right? Above 4.4 is just too hot, period. So this is where they will actually start to have rollover debt really pinch, and it will create labor shedding, which will create unemployment, which is a big hairy mess that Trump's going to want to try and stay clear of. So I'm quite sure they're going to try and finagle lower rates. It's just for right now, they can't, because we have too much. There's no fiscal restructuring. There's just no way. Yields are still incredibly sticky with inflation. We know this, even as oil prices fall, which is helping inflation, quote unquote, stay manageable. Inflation is compounded. It is extremely strong over the past 4 years on a compounding basis, even if rate of change has fallen. So that's why I really think that this is going to be another kind of accident waiting to happen if yields don't come back inside that kind of 4.37 area, and bonds then get a bounce, and we kind of do a little bit more of a rebalancing between stocks and bonds. So I know I got a little off track on the macro, but that's my strong opinion on too high yields. It's very damaging.
Yeah. The Russell's maybe playing a little bit of chicken with rates then. Maybe it's saying, okay, you want us to survive, get those rates down. I'll stick with it, and I'll have to make some decisions at the end of the week. Palo Alto, another one. I sold some calls, as we talked about a couple of weeks ago. It came down. I bought them back because I didn't want that November exposure into the election, and we got that nice bounce today. So I sold some out again. It's starting to look kind of good. So I'm wondering if it's not the smartest thing, but decent levels. I got $20 for the 390 or 395, and on a $50 move, since I've owned this thing, I think I've made $70. So that's how you play covered calls well. You know when to step aside, and you know when to get involved. You're not always going to get it perfectly, but sometimes you got to just get the heck out of the way and don't sell cover calls, which is really a big part of my process, is helping people to understand there's a time when you let the stock do the work, and then there's a time where you help it out with nice juicy premiums. And so that can really help to have that idea. And cash secured puts and things like SoFi, Shake Shack, I love. It's one of the only junky food type places that's doing well. The Reddit hood, I'm short some covered calls, unfortunately, because it grabbed a bit of that crypto love today.
Yeah, that's actually that's better one than coin. I like that one better. But anyway, yes, good job on that. I know you're hurting a little bit today, but that'll recover.
And then long Nvidia. So what I did was I said, when I put it on, we talked about it a while ago, I said, I'm going to buy these June. So I bought June of next year. They weren't cheap. I think I paid $20 for these calls. And I thought, you know what, I'm going to keep the position size manageable, and I'm just going to hang out in this for a while. But I said, look, if it comes down, I'm going to finance some of those. So it went from 141 down to the low 130s. And I said, okay, I'm going to do what I said. And I sold some Dees 125 puts, which I got 7 or 720 for. Now those are going to finance some of those upper calls that I bought. So I'm going to let those burn off. Maybe I'll buy them back before earnings. And then those are going to help to pay for some of my upside. And hopefully your call on SMH is good for 270. And I mean, look, if the market's going up they got to own Nvidia, right? I mean, they have to. It's just one of those stocks that's a must have. So I feel like there's still some, and you can see it act well, but it really isn't it amazing? You're really getting this sort of bifurcated market where ASML is a disaster. SMCI, you don't even want to talk about. It's not even funny how poorly that's doing.
But
And then
they can
the other
still
one,
have money flow into the US based on all the things that I've kind of talked about on the macro side, and they're going to find their way into tech and AI. It is just a de facto. It's by design and default, so that it can still bid it up until we have some kind of fraudulent release like an SMCI, right? And it falls from grace. But for right now, into end of year, it's still a bullish backdrop. Before folks pop off, I do want to share that this is something that Hans and I do really every single day for clients. You probably know that by now. This is exciting for us. We love working with clients and supporting clients, all kinds of time frames, all kinds of assets, all kinds of countries. So this is kind of cool. And we do this not just my live trading room, but our individual Slack channels and a lot of custom trade support. So if that's of interest, definitely check out LaDucTrading.com. We've got 3 tiers: beginner, intermediate, advanced. That's our Chase, our Club, and our Edge product. We also have a fabulous options training program that Hans delivers. Now, if you're not a member, you don't get him like you do every single day in LaDuc Trading, but you've got phenomenal education. And if you become a member of LaDuc Trading, you get Hans's program at 50% off. So this is the best of both worlds. So think about that. We are going to come together every Wednesday at 4 o'clock, talk about what we see from macro to micro, specifically option trades and how they're doing. You're going to see this continuation. We're going to touch on some themes and some surprises. Today was a big surprise, but we're already bullish. So this is really kind of an important theme that we keep recurring through every single week. And you also see some of the same trades, NVIDIA and Tesla and Bitcoin, oh my. So we do have a growth surge, but there's tons of value plays. They're really my bread and butter from a swing and trend time frame, which are boring that we don't really talk about, but they're doing phenomenally as well. So if you're into infrastructure and more of a kind of profitable but boring or set it and forget it swing trades, this is definitely outside of just momentum. Then definitely you'll be well served. And we have a team of 10. So we're talking about a complete trading desk of 10 subject matter experts, from macro to oil to Elliott wave to options to you name it. So we got it going on. Anyway, I just wanted to leave with that. LaDucTrading.com/Hans if you're interested, obviously, or the services. And this is why I recommend Hans. So this is why I brought him in as a contributor and also as a partner. I recommended him to clients, which is a big deal for me. I have a family of contributors I've worked with for years, so I know them extremely well. And this is comfortable for me to say, hey, you're going to be well served. This is a client that literally wrote an unsolicited testimonial. It popped up into my thread in Slack, and it's beautiful. And it's exactly what we want to do. Clients, either new or old, learn new tricks. They gain confidence because they learn skills in how to manage their stock, mostly portfolio or trades. And this is a beautiful thing. So anyway, we want to just encourage you to check this out a little bit more. And of course, to come back next Wednesday at 4 o'clock for Macro to Micro Options Power Hour. Any final thoughts, Hans, before we close for the evening? I would just say, yes, we have FOMC tomorrow. And I will be doing a live trading room from 2 to 3. And it's also going to be open to the public. It might be like watching paint dry for the first 30 minutes until Powell gets up there. But I will be available for questions. And then we'll see what Powell has to say at the presser, whether it'll be dovish or hawkish and how the market reacts, specifically dollar and yields and equities.
Yeah, it's going to be another interesting day for sure. And you mentioned boring stocks. I've got some put sell verticals on Ulta, but I didn't think anyone wanted to hear about Ulta
Yeah, that's
Beauty.
what I mean. But we talk about all the stuff during the room.
Yeah,
I'm fascinated.
exactly.
Tell
Right.
me more.
There's just not enough excitement in that, but there's certainly great opportunities out there in high quality names. And that's actually one of the things that I focus on, is high quality as well. I like to trade this stuff because it's fun and it's what's happening. And, the traders in the programs and our members like to see that stuff. But there are lots of ways to play the income game in options. And we love to focus on
You and Archna are very focused on the income generation. I'm very impressed by the track record from both of you. And this is something that some clients don't appreciate so much, and I want them to. So just keep at it, because this is really where true wealth is protected and profit from these income strategies and options. Mwah, they're beautiful.
Thanks,
So,
Samantha. We'll see everybody.
let's survive this week. Bye.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.